Hello everyone, this is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today we're going to talk about 3 new refinance companies that do not have to, they don't need your social in order to get you approved, okay? Now, of course, at some point you're going to have to give them your social once you accept the terms, but again, a lot of banks are shifting over to the new pre-qualify, and of course it used to just be Capital One, but now a lot of banks are now moving over to this. So let's go ahead and talk about the new 3 auto refinance companies that are now emerging in the marketplace. Number 1 has to be the new company AutoPay. It's actually pretty cool. AutoPay is, of course, they have 3 different refinancing programs, and 2 of them I've never seen ever. Like, I was in the auto industry, for those who don't know, for 6 years. I sold over 500 cars in less than 4 years, and it would be so great to see some of these people get that refinance structure. So of course you have the traditional refinance, right? Where let's say you owe $15,000 in your car, and then of course your interest rate was, let's say, 18%, but your score has now gone up to, let's say, 650. Real numbers, right? A lot of people have those numbers. Now here's the catch, is that now you can either keep paying what you've already been paying with the current contract that you have in the current bank that you have. And most banks, when you have an open auto loan with them, they will not let you refinance with them unless it's like a credit union. It's very rare, okay? So, but with AutoPay, of course, and like any other traditional, refinancing, then of course, you qualify, you put in your information, no social security numbers needed. Of course, income and all that stuff is going to play a role. And then once you put in your information, then they're going to go ahead and give you the pre-qualification if you get pre-qualified. Of course, if you decide to move forward, then of course you can go ahead and just do it like that. But either way, once you put everything in, then they're going to give you, of course, if you qualify, a lower interest rate, which is going to then in turn be a better payment for you. You can also go to lower interest rate or stretching out the term. That's your prerogative if you want to do that. So that's number 1. The number 2 way is something that just came out that a lot of companies are starting to do. And it's what they call a lease buyout, okay? For those who don't know, if you do a lease, you can always buy out your lease, but you normally have to wait until, your lease is up. So how it works now is that these companies, they're stepping in a little bit earlier, and they're saying, hey, we see that you got a year left on your lease. What we can do is we can turn, the remaining balance that you have into a structured, auto loan payment, okay? So it's the exact same thing, but you don't necessarily have to wait until the end of your term. I think that that's pretty cool because people can jump out of a lease a little bit earlier, try to dodge that extra mileage. For example, I remember selling a car to a guy where he got a 12,000 miles a year lease, but then later down the line he ended up driving from Illinois into Ohio 3 times a week, and that most definitely took up a lot of his mileage and everything. My point is that he had to pay the overage, and then he had to go into a smaller car with a higher payment just because of the negative equity from the first car, okay? So it can happen, but now with this type of solution, he could have jumped out of that a lot earlier and then turn it into a traditional auto loan and then put the miles on a vehicle that didn't matter anymore. I mean, well, the structure didn't matter. You didn't have to worry about paying over on the mileage and things of that sort, okay? So that's called lease buyout refinancing. It's incredible. I've never seen anything like it, but that has absolutely nothing on the 3rd way. And just so you guys know, AutoPay is the first company I've ever seen to do this. By the way, they're not paying me to do this video, okay? So I need to reach out to them. But either way, I just thought that this was so significant because they now have cash back auto refinancing. So how does this work? Much like just like you have, let's say, equity in your home, right? Let's say you owe $100,000 on your home is worth 120. You can take out a loan, for what they call an equity line of credit or whatever the case may be. Now the same thing they're doing cars. So AutoPay is letting you get up to $12,000 cash back, okay? And I'm sure it's going to work like this. If let's say, for example, you owe $10,000 on your car, but your car's worth 15. You see it all the time. Now you'll be able to refinance that loan. They're going to take the $10,000 balance back up to $15,000, but they give you a $5,000 check because they have the car as equity. So it's pretty cool. It's the exact same way as it would be, a home equity line of credit. This is major for a lot of people, as we know you're getting close to paying off your car. Again, I'm not advocating that you do something like this, whatever the case may be, but if you're going to drive that car till the wheels falls off, and if times are tough or you want to start a business or whatever the case may be, I mean, this is a great way because everybody has an auto loan. Most people do. So you don't have to necessarily have a house to get some type of, equity line of credit or, a cash out refinance or something like that traditionally with a mortgage. But with an auto loan, this is incredible because I'm sure this is going to break waves for other companies to start doing the same. So of course, that's the first company is AutoPay. The next one is going to be called Moto Refi. Now, Moto Refi, again, another company, traditional refinancing. You don't need a social security number to get pre-approved. It doesn't affect your score at all to check your interest rates. And then of course they also have the lease buyout program as well too. Okay. And then last, the next company is called Clearlane. Now this is Ally coming out with their own structure, which I'm very surprised a lot of companies don't do this. Because for those who don't know, Ally also does traditional, auto loan financing, just like Capital One. But see, Capital One, of course, they took over a lot of the market share because they have a refinance program. So about time that Ally has something like this, a branch off of what they do. Now, I don't know if you currently have an Ally, an auto loan with Ally currently, can you refinance through Clearlane because it's owned through Ally? So of course you guys will be able to let me know that if you are able to do that, or I'll probably find out. I'll call them probably tomorrow and put the answer in the description if I get some time to do so. But either way, I think that's major. Again, another company, they don't need your social to pre-qualify, a major brand coming from a major company, and of course I believe they do the lease buyout and of course traditional refinancing as well. But a lot of these refinancing companies are starting to pop up. You guys are probably getting stuff in the mail. I mean, you still can do business with Car Finance, Capital One, Open Road Lending. There's so many companies that are out there. If they're going to give you a better interest rate, why not take it? But all those companies I mentioned, except for Capital One, they don't have the pre-qualified, I won't say software, but that's not part of their process just yet. But a lot of companies are starting to revert to the soft pull method because they see that a lot of people are becoming more comfortable with the entire process. So, but either way, hope that was some good information for you guys. If you like this video, like it. If you want to share it, share it. And as always, be sure to subscribe as we have nothing but great content on the way. Thank you guys so much. Have a great day.